It's Thursday, September 18th. Welcome to MarketFoolery. I'm Chris Hill. Joining me in studio today from Motley Fool Funds, Tim Hansen. Happy Thursday.
Thank you, sir.
Alibaba going public tomorrow.
Boom! Finally,
We've been getting some inquiries. Let's talk about it. I don't think there's anyone who thinks that this is going to be an IPO that does anything other than make a huge pile of money.
that seems to be the direction it's heading.
And yet, I'm curious what you think. I guess let's talk about the IPO and then we can get into the business, because let me just hit you with something I read today, and this is probably not news to you, but it was news to me, and I'm reading from one of CNN's websites. Investors who buy the stock don't technically get to own the company. Jack Ma, CEO, founder, CEO. Jack Ma and a group of Chinese citizens who founded and helped run Alibaba are still the technical owners of the company's assets. Rather, investors simply get the rights to the profits that are sent to a holding company known as a variable interest entity, which is based in the Cayman Islands, because, of course, that's where you're going to base something like that. So just on the surface of that, that makes me think, well, wait a minute. Is there a heightened level of risk when this is the setup for investors?
Yes.
Okay.
Next question.
Is it such a heightened level of risk that you yourself, regardless of how big Alibaba is and how dominant a market share the company has, is this a situation where, as an investor, you say, as long as that's the situation, I don't want any part of this?
Yes.
Really?
Well, so the thing here is that you don't own the operating business. You own shares of a holding company which has a contract with the operating business in China. And the reason it's structured that way is because, technically speaking, foreigners are not allowed to own sensitive assets in China, and information technology is included in that group, as is banking, energy, food, things that the Chinese government thinks might foment revolution. So the dignity of that contract, the dignity of that contract has really never been tested in any legal forum, because there are lots of companies that use this structure, Baidu, Sina, others. And so it's not clear that if the contract ever were to be challenged, which side would be upheld. Would the Chinese citizens be allowed off scot-free? Would they have to uphold their obligations under the contract? Where would you even litigate such a matter? Would it be in China? Would it be outside of China? And there are some horror stories about these VIE structures going poorly. A few years ago, there was a company called Gigamedia, which owned, I think it was called like T2CN, which was a video game developer in China. And they had a contract with, they acquired the company in China and then had to structure it as a VIE. They made the mistake, in hindsight, of keeping on incumbent management to run the business. And ultimately, they became dissatisfied with how incumbent management was running the business and decided that they were going to fire this person. Rather than take his firing and go home, he took all the paperwork.
He took all the money.
He took all the right to do business in China and walked. And Gigamedia tried to get it back, and China said, no, you don't have any way to do that. That doesn't work. Another potential issue that was surfaced a few years ago by the SEC had to do with a company called New Oriental Education. And they questioned whether New Oriental, because the other part of this contract that's never actually been tested is, you, as a foreigner, have a right to the profit, but no Chinese operating company has ever actually distributed the profits back out to the holding company. They've all said they're going to keep the money in China to reinvest it. China obviously has controls on the inflows and outflows of currency from the country, and various tax regimes that govern repatriating earnings, as we do here in the United States. And it's a bit of a fuzzy issue as to how much cash would actually be withheld were a operating company via a VIE structure to try to actually transfer it back out to shareholders. So it might be 30%. It might be, I've seen estimates as high as 80 or 90% after all the relevant tax authorities get their cut. So valuing the business is kind of hard because you don't know what actual claims on cash you have as an investor. You're sort of just hoping that I don't know, I guess they continue to invest it at high rates and you do okay, and someone buys the shares off you on the other side at a higher price. There's also you can take the time arbitrage bet that China will liberalize this regime more and more, and if you're going to hold the shares for 10 or 20 years, it will be easier to get money in and out of China. Or maybe they'll declare VIE structures a remnant of the past and say, foreigners, yeah, you can own internet assets in China. We're not that afraid of things happening anymore. I don't know what the likelihood of that is. But at the end of the day, the key parts of this structure for foreign shareholders have never been declared actually legal in China, and they've never actually been tested. So you are putting a great deal of faith in the management team to do it the right way. And while there are some companies, I think, who have demonstrated that maybe they deserve that faith as long as you are getting the requisite rates of return. Like, people running Alibaba have a very checkered history of honesty.
To put it bluntly.
So I wouldn't necessarily give them the benefit of the doubt.
This is a company that, if the IPO goes as expected, will have a market cap somewhere close to or higher than Amazon.com. I mean, this is right out of the gate most likely going to be one of the biggest, certainly, e-commerce companies in the world. I am curious what you think the threat is to businesses in the United States. And just for one example, earlier this week, shares of LinkedIn were down, I think, 7% in a single day, and it was sort of tied back to Alibaba. Yahoo obviously has literally a stake in Alibaba. Yahoo is about to get several $billion because they have to sell 27% of their stake right out of the gate. Just when you look at sort of the landscape of the big e-commerce...
I shudder to think what Yahoo's going to do with that money.
What's that?
I shudder to think what they're going to do with that money.
That really, let's talk about that for a second, because that is, on the one hand, you can look at that and say, gosh, would that we all had that problem for our businesses, that all of a sudden now we have, say, $6 billion that we didn't have last week and we have to invest it. But it really does come with a hell of a lot of pressure for Marissa Mayer.
Well, I mean, the market, given what Yahoo's been doing recently in their core business, I think the market would much rather have that cash tied up in Alibaba than it would have Yahoo have the discretion over it. Certainly that's been a better place for the cash to be over the last five years. I think they have committed to giving some of it back to shareholders as dividends. Maybe they'll do some repurchases, although the stock's probably expensive if they're divesting Alibaba. But who should be very excited are some California-based sole proprietors of potentially disruptive internet technologies, because Yahoo may throw some money at them in the pursuit of growth. And then maybe never use the product again.
And then just quietly shut it down. How threatened should Amazon, eBay, LinkedIn, like if you're a shareholder of any of these companies, if you're leadership at any of these companies, do you look at the business of Alibaba and think they're a monster we're going to have to contend with, or do you look at it and say, you know what, the only difference between last week and this week is this, by the end of this week they're going to be a public company?
I think the latter. Alibaba's obviously built a really, really impressive business in China doing online commerce and then doing B2C commerce between people who want to build things in America and suppliers they can find in China. It's a great model. It's a model that they've, an e-commerce model that they copied to some extent from, the pioneers of it. They've got a payments processor. It's a very strong business, but I think at this point it's probably most powerful in China. I mean, if you had expectations of Amazon.com or eBay or someone dominating the Chinese market, I think that market's already spoken for. But similarly, I don't think Alibaba, the U.S. market is probably also already spoken for as well. So, it is what it is. Obviously, I think you'd rather be in China given the growth rates and the internet penetration rates and things like that there. So it's a great growth story. It is an extremely profitable, fast-growing business. I mean, it is a behemoth in China, and that is the crux of the investing thesis. You just have to, I just don't think management is very, very trustworthy.
Let's move on to the NFL. And this is something you...
Speaking of behemoths.
Speaking of behemoths, boy, the last couple of weeks for the NFL could hardly have gone worse in terms of the image of the NFL. We were talking earlier this week. I think you had tweeted out that you were basically like, I think I'm done with the NFL for a little while. I think I'm going to focus on college soccer, which, your Georgetown Hoyas. They got a heck of a soccer team.
They have a good team this year.
But in terms of the NFL, I think what's different now is the advertisers are starting to speak up. And when anyone who has spent any time watching pro football on a Sunday afternoon, you can pretty quickly figure out that the big three in terms of advertisers are beer, cars, and fast food. And this week we have statements from McDonald's, from Anheuser-Busch, from Pepsi. I haven't seen anything from an auto company, but Bridgestone Tire came out and basically saying, if you've seen the statement from Anheuser-Busch, which I got to say, whoever wrote that should get a spot bonus, because that is in just 3 sentences. Anheuser-Busch, which, by the way, pays the NFL $200 million a year in advertising. In just 3 sentences, they just completely undercut the way the NFL has handled all of these issues with domestic violence, potential child abuse, all these sorts of things. I am curious, what goes through your mind when you see this playing out? Like how much, because despite all of this, it's still a behemoth, the NFL. It is still poised to make billions of dollars over the next, I think, 7 years is how long their current television agreement goes out. How threatened is this business right now?
I don't think it's threatened in the sense that people are going to stop watching football and it's going to stop raking in the money. I think it needs to revisit its priorities in some way, like a lot of businesses do over time, and draw a map of its various stakeholder groups and decide, which ones it chooses to serve. Generally speaking, the NFL does not have shareholders per se, but it has owners who all share in the profits of it. And those owners have become fantastically wealthy on the back of, profit maximization. And they have done that by making the game more dangerous for the players, by putting people on the field who maybe haven't earned the right to be there, and trying to make heroes out of people who really aren't that heroic at the end of the day, and in doing so have done a disservice to their employees. I think they've done a disservice to the world, clearly. And depending on who you are as a customer, maybe you love, you just want to see the best 22 guys on the field at any given time, flying around, hitting each other as hard as they can, bordering on, legal versus illegal in the rules. Maybe that does serve you as a customer. I think, if you're not to kind of go kumbaya or what have you, but as a parent, it's hard to get excited about turning your kids loose to watch people that aren't great character, and having them root for people and not explain to them the other side of the story. So I think in a sense they have done a disservice to their customers. So I think it's just a matter for them saying, look, we've got a great product, we've got a great history. Let's rethink how we're going to serve all of our stakeholders at the same time in a way that's fair and tries to balance the interests of each. And if it costs the owners some money, it would probably cost them less than what it would cost them if Anheuser-Busch and others stopped advertising with them, or others stopped paying for TV rights to the games. Is that going to happen? Probably not. At the end of the day, for every person like me who was like, yeah, you know what, I'm going to go watch Georgetown soccer last Sunday, there were a million people who didn't. So
you mentioned the profit maximization, and I got to say, as I've watched this story unfold, one of the thoughts that has gone through my mind is looking at the business of the NFL, looking how that business has been run. And up until, I would say, maybe a month or so ago, it's been an incredibly well-run business in terms of all aspects of it. And in some ways, the most surprising thing to me, is how ham-handed the league has looked over the last couple of weeks.
Well,
And how everything seems to be sort of done on an ad hoc basis. And I just sort of look at it and say, did you guys just get replaced by the Keystone Cops?
I don't think it's that recent. I think going back a few years, you can see that they've been doubling down on the profit side against the best or the interests of the other stakeholders. All the talk about lengthening the schedule.
Yeah.
What was the reason for that?
More games?
More games, more money.
Yeah. Expanding the playoffs.
Allowing the season to start when the referees were on strike.
Yeah.
That was a terrible product to put on the field. Why did they do it, though? More games, more money. I mean, this ad hoc, how do we keep the train rolling and keep the money rolling in attitude, I think has governed a lot of their decision-making for a number of years. And it has recently gotten very, very ugly because it's reared its head in some much more emotional ways that I think strike people closer to the, pull on their emotional heartstrings more so than a referee strike, what have you. But I think it's the same decision-making matrix being applied. Like, how do we solve this problem? That comes back to haunt you. And whether it's the NFL doing it or whether it's coach, pushing on all cylinders to, push bag sales one year and they, degrade their brand in the process. Not that those are recent events in the NFL are equivalent to pushing more handbag sales.
No, but it does go to the, if not identical, certainly a similar management mindset.
Yeah, if you're out there maximizing near-term profits, you are also probably making very bad decisions. And I think that's what we've seen here in a very, very ugly way for the NFL.
We will end on a lighter note with some comments we got from listeners. You can follow us on Twitter at MarketFoolery is our handle. Got a tweet from Matt Laswell, who wrote, just in case you need a cautionary tale for an upcoming podcast, and he included a link. In some ways, this may go back to some of the things you were talking about with Alibaba. Included a link to a story about with a company press release, and the headline of this is a company's press release. The headline of which was, CEO and COO disappeared, most of the company's cash missing. And this was the CFO of it is a shoe company based in Germany, but you were saying it sounds like its operations are maybe in China.
I think so.
But basically, they just up and all of a sudden, the CEO and the COO, who appear to be related in some way, they're gone. The company's cash is gone. This is a stock that trades on the Frankfurt Stock Exchange in Germany. Not surprisingly, shares down 76% on Tuesday. You saw this.
I think that's for cause. Sometimes the market overreacts to this sort of thing. I think this is appropriate.
But I think leadership disappearing,
absconding,
untraceable, and taking most of the money with them. You're saying that makes sense.
This isn't the first time this has happened in China. There was a company a few years ago called China Milk Products. And their business was they dealt in bull semen.
Okay.
And it traded in Singapore. And one day their auditors called them, and they didn't pick up the phone. And then some major shareholders started calling, and phone calls didn't get answered. And it turned out they had already been missing for some time. So kudos to these folks for discovering this early in the process, because I've seen it take longer. But
kudos to the CFO who put out this statement.
And this also goes back to not that it's directly related to Alibaba, but at the end of the day, if you're going into court in China and you're a foreigner and you're suing a Chinese national,
good luck.
You have an uphill battle, I believe.
Yesterday, we got a question about things that are must-see or must-do if you're visiting Washington, D.C. Morgan Housel, I said this.
Now, actually, it will be interesting to see what happens because China is trying to crack down on corruption.
Oh, okay.
And if the Xi Jinping regime decides that this is an ugly story for them, I would also not want to be a Chinese national when the Chinese government decided to make an example out of me.
Right. If the CEO and COO are found by the Chinese government, again, good luck.
Yeah.
Morgan Housel, as I mentioned right before we started taping, so smart, so great on so many topics, but apparently not when it comes to the question, what should people do when they're visiting Washington, D.C.?
He does live in Baltimore.
He does live in Baltimore. I just thought as someone new to the area.
Which, as a person who makes a lot of good decisions, seems like a poor decision by Morgan for a variety of reasons. But
well, You know, the things we do for the people that we live with
That's
that
true.
we're related to by marriage.
That's true.
From Tobin Anthony, who tweeted, Friday night jazz at the Hirshhorn Gardens. # cool things to do in D.C. I have heard good things about the Friday night jazz at Hirshhorn. So there's one more thing to do. But you have lived in the area for a long time. You went to Georgetown University. I mentioned the Teddy Roosevelt Island because I think that's a neat place to visit that doesn't really get a lot of the attention that
We saw a 6-foot-long black rat snake there once.
Wow, you just completely undercut.
So that's cool.
For anyone who is thinking about going to
climbing
Roosevelt.
up a tree. My son saw that and forever remembered that snakes can climb trees.
Wow. What do you recommend for someone who's coming into town?
Is there family? Or is this a single guy on the prowl? What are we?
I think this is a husband and wife.
Husband and wife.
Husband and wife, young couple coming in, making a long drive, taking a couple of days in D.C., some things to do or, things that it's like, hey, here's something that, is maybe not off the beaten path, but look, everybody knows about the Lincoln Memorial, Washington Monument. They're well-known things, but... Mm-hmm. What's a nice way to spend an afternoon or evening?
The Botanical Garden is lovely, which is in Northeast D.C. And if you are of the beer drinking type, the Botanical Garden is located very nearby the D.C. Brow Brewery, which is on Bladensburg.
Oh, that's right.
Bladensburg Road, which is a nice, and the Costco that sells liquor is right there. So you can do a nice little triple there of hitting the Botanical Garden, D.C. Brow because they usually have food trucks there for lunch and a beer. They do nice IPAs, and then stopping at Costco so you can stock your own hotel bar that night. So that would be my activity set in Northeast DC. Especially if you have a few weeks until you're coming, the leaves are going to start to change at the Botanical Gardens. Yeah. It's quite nice. I think they always have something good on at the modern part of the National Gallery. I like the modern wing on the National Gallery. Georgetown soccer, top 10 in the country. You can do your little Georgetown afternoon.
If you're a fan.
There is a...
Georgetown, great neighborhood to poke around in.
Yeah, no, right, absolutely. The school is lovely, and I think the tickets are $5. There are lots of places to eat lunch down in Georgetown.
It's a steal.
And then the new, if you're into the foodie thing, there's a new market called Union Market, which has lots of local proprietors. There's like some oyster farmers.
Is that in Georgetown?
No, that is in, I think it might be on 6th Street, north of the Verizon Center. That's worth the stop if you're into that. So I would divide up, tackle the mall, hit a museum, do the Georgetown thing, do the Botanical Gardens thing. Yeah.
Before we wrap up, longtime listeners know our mission here at the Motley Fool is to help the world invest better. And I know that amongst our dozens of listeners, we have members of our different services, but we also have folks who...
And Great Falls.
Oh, wait a minute.
Billy Goat Trail. If you like to hike, the Billy Goat Trail is outstanding.
Really?
Have you never been on the Billy Goat Trail?
I've been on a couple different trails. I feel like
it's the rock scramble one right along the river. Yeah. That's out. That's 4 miles up from Georgetown.
That is
Anglers Inn Park. Do the. It's like a 2-mile hike. You can knock it out in a few hours, and it's a lot of fun. Nice view.
Nice.
The Billy Goat Trail is outstanding.
God, it's so much more valuable information than Morgan offered yesterday. As I was mentioning,
that's good because I'm extraordinarily. Morgan finally got one of those Wall Street Journal cartoons of his head.
Yes, because he now
I forget the exact term for them.
Periodically writes for the Wall Street Journal.
I am so envious. This is a lifetime dream of mine was to get one of those, and he got one.
Yes, if you follow Morgan on Twitter, that's now his avatar.
Oh, as it should be. I mean,
absolutely.
That's an achievement.
Yeah.
So I'm glad I can best him in one way because he's achieved a lifelong dream of mine at the tender age of whatever Morgan is.
As I always say, we have members of our services who listen, but some folks who are listening are not. So I want to mention we have a special offer for MarketFoolery listeners. If you just go to marketfoolery.fool.com, it's a free way to sort of kick the tires of our flagship service, which is Motley Fool Stock Advisor, run by David and Tom Gardner. So check it out. Just go to marketfoolery.fool.com. It's a special offer. You get sort of a free trial of Motley Fool Stock Advisor. Again, a market-beating service since its inception 12 years ago, so check it out. Tim Hansen, as always, thank you for being here.
Thank you, sir.
As always, people on the program may have interest in the stocks they talk about, and the Motley Fool may have formal recommendations for or against. So don't buy or sell stocks based solely on what you hear. That is it for this edition of Market Foolery. The show is mixed by Ryan Caton. I'm Chris Hill. Thanks for listening. We'll see you on Monday.